The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin.
And I got Lou from Fairfield, Connecticut, man. How you doing, Lou?
I'm doing good, Darrell. And I got to tell you, you're not just blowing hot air out there. I think the way you look at the market is terrific. You're a nice guy as far as over the TV. All the research you do, all the homework you do, I truly appreciate it. I appreciate your view of the market. It's awesome.
I appreciate that. Thank you very much.
Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. Let's check out the S&P right now. We got the S&P is up 17 points, so a nice big move today. We got the Russell up 17.8. The Nasdaq's up 50 points on the day with the Dow up over 160. So some nice big moves. Market just taking off. And we're going to have to look at it. We'll have to go into some details here and see what's going on. Waking y'all up a little bit. We got the metal markets. We got copper right here. It is currently up barely anything. So pretty flat on the day. We got gold up 6 points on the day right now. We got silver up 0.104. So, you know, some little moves there. Natural gas is also pretty flat on the day. We got oil is down 23 cents. Like I say, some days the indices moving, some days the ag's moving, some days the energies or metals are moving. So we got corn right now down 4.5. That's a decent move. We got soybeans down 15. That's a solid move right there. And diving on into our Forex FX pairs right now, we got the euro dollar is down 5 ticks on the day. We got the Aussie dollar is up 69 ticks on the day. We got pound dollar up 57 ticks on the day. Or pips, depending on how you like to word it. Pardon me there. We got the pound dollar is up 57. Dollar franc is down 5. Dollar CAD down 33. U.S. yen is up 18. Aussie yen is up 88. Euro yen is up 20. And the pound yen is up 81 pips on the day. And looking at the euro pound, it is down 23 pips right now. Anyways, some great solid movement. And finally, markets have been so quiet. And, you got to be here for all the days to be here for the good ones. So hopefully y'all are capturing some of these nice trends that have been happening this morning. And we can take a look at those. Dive into them, see where everything is at. Let's see here. Pull it on up. And there we go. So checking out the Russell. It is pushing right now up on the 1.5 deviation level. So nice solid move. Back on out. And you can see how it's just been running along really all morning long. And pulling up a few more things. We'll run through some of the different ones. But anyways, a nice move right there on the Russell. And wanted to pull up just where, one thing you want to be aware of right now, you want to be looking for things like volume spikes and things like that as we're moving this far up and going on through them. There we go. Okay. All right, so if I go over and I'll pull up the pound right now, but I want to switch that back on over. Pound right now is sitting, by the way, up at a 1 deviation level, just sitting there, just waiting to turn on back around. So be very aware of that. It may keep going. It's maybe just one of those days where everything just goes and goes and goes. But right now it's sitting up at 1 deviation, and we're getting volume spikes as well, looking for a potential short. So there's a lot of different signs right now leading up to the market turning around, heading on back down. And let me see here. We got right there, we got a low, 71.62, 71.63, 71.62. Yeah, both of them 71.62. Would like to see it break a tick down before we just right off the hour as a turnaround there, but we're definitely at the right spot. We're at the 1 deviation level. We got a volume spike. Really, this is the point where we're looking for it to go ahead and head on back south. So that's a nice quick review of the pound. You can see the last several volume spikes have been pretty telling for us, but it's always best to get that confirmation of that low break first. Okay, so my chart's taking a second to update here. But while we're waiting on that, we can also go over and check out our current news for the day, and as everything comes on through. So let me go ahead and pull up, Forex Factory or whatever it is you want to look at, just for, the current news list of the day. We got, don't forget, we got Canada is closed on down today. So with the bank holiday, we had the Aussie dollar have its interest rate announcement come on out early this morning at 12:30. And we have unemployment rate come out of Europe. But beyond that, not a whole lot of other just, major news. Just trying to look for Goldman Sachs got fined for dark cloud pool violations. The dark pools. Anyway, so basically they sell them that, hey, they're a safe place to trade as we take your money. But anyway, so pound dollar, we're looking at a short right there. Maybe we'll look at a trade. We got this chart up. Let's check it out. Let's see if we can maybe get ready for one. It's always fun to do some trades right here on TFNN. So I'm going to pull that up before I even switch over. Being at that deviation level, getting that spike. Makes it fun to pull them up. Just got to go over here. Okay, so what I'm doing right now is I'm logging into my scanner, first thing. And so we'll get that on up. And on this one, probably going to be looking at a binary. But I'll look at the spreads. We'll see what we got. And it's usually not just going to fly on us. Especially at deviation level, it likes to oscillate around and hang out a little bit. So, not going to stress out about having to have a trade done in 5 seconds. Now, when I'm doing like trend pop trades where the market's moving really fast, that's going to require me to be a little more responsive and ready to go. But this is lunchtime, and things slow down. Okay. Let's see what we have. So we're looking at around 71.62. If we go down here and choose a pound. Right there, let's see what we got for current hour. We got a 71.67. It's about the only in the money thing we got going on current hour. We do have some deeper ones, but we're talking like 71.64. I mean, it's $43. It's so close to where we are right now. Okay, so if we go to look at this, I mean, things are really, really quiet. The implied volatility is extremely low. And so now I have a choice I got to make over here. I can do the in the money. I can also do the out of the money. Okay? So I could be looking at either one of these two trades, or I could be looking at both. And we're talking about a trade that really the market is not that far away. I mean, it's moving pretty rapidly. I'm probably more inclined to go with the out of the money contract on this one. So if I'm going to do anything, let's look at that out of the money in a little bit more detail real quick. But I'm looking at the 71.57. Is that realistic? Yes, that is realistic within our frame. So I'm going to go ahead and take that right now. We're going to go short the 71.57. It's not that big of a move, but it's within our high to low range of expectancy. If we look right down here, we're down to 71.54. So to see it move down to 71.57 within the next 45 minutes would not be abnormal. We just hit a nice big up move right there. We've been hitting the expectation of movement pretty solid. Or at least 75% of that all morning. So this 1 hour we didn't hit it. Many of the hours we actually have exceeded it. We got 75% on that hour. So let's see if we do hit it again on the downside. I mean, after one deviation, it's not unheard of to think of that. So looking at a short 71.57 for approximately $90 on the trade, and I'm looking to buy back at least half that position if that price is hit. Okay? So what does that look like? Just as a simple position right here, we go in. You go short contracts, go in here. We're going to set to buy 5 back. Okay, at 57. Place that order. There we go. That's all there is to it. Okay? Now, as it moves on up, we can look at, we do have that other strike up there, up at 71.67. And so we could look at a potential in the money trade as well to help hedge some of that risk. So keep your eye on that one. But I don't know if we're even going to get a chance for it to get there to be able to allow that to happen. But looks like it's moving on down. So we'll see if we get that. We might get that right now. Let's see if it keeps going. We just need a few more ticks on it. And we'll be able to take our profit. So not a bad move. If we go in there for about $10 risk and we can make $30, 300% on a, God, what is that? A 4-tick move? And not have a stop loss? That's pretty nice. Wouldn't you agree? I mean, that's not bad at all. So, and that's, I mean, just using the binaries, using the speed of the binary contracts. And like I said, we just need a couple more ticks. We're already up, $60 on the trade. And so it wouldn't take too much more for it to pop down there a little bit further. And take that off. And so it's a little bit more lenient on that one. I mean, usually I would require, let's see here. We got, this is the 10 minutes or this is the 5 minutes on the spike. Usually I'd require it to go a little bit further, like basically break down either on this one or this one. It broke on the one right after that. So how was I able to give it a little bit of wiggle room on that trade, on that spike striker? The reason I was able to give it a little bit of room was simply because, I mean, we're at the middle of the expected range on the hour. We were right at the middle. We had plenty of room left. I wasn't even pushing the expectations at all to try to get down to that price level. So, plenty of room to allow it to, move down. Plenty of time right at the top of the hour. We'll see how it works out. It's in profit right now, and you already could take a profit for 100% if you wanted to. But let's see how it finishes out with the rest of the hour. Y'all stay right there. We'll be back right after this.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Alrighty, folks, we'll come on back here to the Diagnostic Trading Hour. So right now we're talking about this volume spike right off of the deviation level. And looks like it's coming on down, heading our way, so hopefully that keeps on up. But we got our take profit order sitting in there. We're up well over 100% right now on the trade. And some traders will go with the mantra. It's not necessarily a horrible idea. I'm trying to make a little bit more than that, but you can go, win up, double take off half, and basically whenever, or at least 100% take off half. Double take off half is a good one, because that way you actually lock in something. In this case, we were up about $300, so you could have already taken off some of that. We'll see if it keeps going right now, and just watching what's left on the position. But see, I have $262 right there on just a mere 10 contracts. So pretty simple trade, and it looks like it's sort of trying to bounce a little bit right off that deviation level, which is right below, right below our strike level. So it just nicked it and came right back up. One of the things this does bring up an interesting point is Nadex, not Nadex so much, but the actual contract itself is based on the price, is based on the underlying market. And the reason I bring that up is because basically, if you don't understand that, you think it's based on the indicative, or you think it's based on your chart, you think it's based on the bid or the last. Like a lot of times on your chart, you're looking at the last quoted price, and you want to understand what it's actually based on. And like I said, it's based on the actual chart itself, on the actual, the Reuters price, the underlying price. So the Reuters data feed. And what that's doing right there is that's quoting. Let's see, how do I put this? They're taking they're basically just looking at the last trade, but for settlement, it's when they're in, and they're going to look at that last 25, mid-price, et cetera, et cetera. So they're not looking at the last 25 trades and the middle 15 while the market's open. They're basing the price, because they'd be very delayed, they're going to base their price on the underlying market itself. And so you want to make sure that you are understanding that, don't be looking at that indicative as your pricing model. Be looking at the actual underlying market. Anyways, okay, so we got that thing going. We'll let itself play out. It's got over 30 minutes to do its thing on the remaining contracts that are on. And let's see what else we have. Okay. I'll leave that chart to the side. I'll bring it back up as things start moving again. And let's look at the Russell, see what we can find on that maybe. I was going to pull up gold, but we didn't quite have enough time with the commercial breaks in there to be able to pull that one up. So that's going to be expiring here in the next couple minutes. And let me see. Yeah, it's going to take too long. Have to shut that one down. All right. So the gold contract I got open right now. So, and where did I go? Had a gold one right up. But like I said, I don't think we have any time to grab anything unless there's like a last minute trade that pops up on the screen. But right over here, and we'll see if there's even any gold contract quoting. Some of these market makers have actually been putting some quotes up. So if they do, then, could be awesome. But right now, I don't see anything. I just see a bunch of people trying to get out of trades. So they're like, hey, I'll sell you this. It's way down here. It's like, yeah, not so much. And let me show you what I mean. If I can find that gold chart for you. There we go. Okay, so we got that one up. And looking at gold, looking at its momentum, it's moving up right now. Looks like a few traders tried to bail on a trade at the moment. We got a quote right there at 57. And so not really going anywhere at the moment. But let me see here. Basically, there's nothing you can do with that. So one thing you do want to remember is in this last 2 minutes, okay, that there is not a lot of liquidity. So it's going to be very hard to get filled, and I'll explain why when we get back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, come on back here to the Diagnostic Trading Hour. And let's check out. We got a caller on the line right now. So let's go ahead and go to the call. We got JR in Seattle. How you doing, JR?
Doing great today.
Awesome, man. How can I help you out?
Yeah, my question was on the NQ, if you could do some analysis on that today, and maybe the ES as far as like entries, possible entries. I know the market's been trading like just straight up today, and I was just wondering if there's any type of retracement entries. I just got my charts working right now, and I'm taking a look at it for the first time this morning.
And just got what right now?
My chart's working right, and I'm taking a look at it the first time this morning.
Okay, yeah, let's check it out. Let's see what we got. Well, obviously, yeah, it's been going just straight up right now, so I wouldn't be looking to fade it at the moment, but let's see where our next levels are and what we got. Give me 1 second. Right now, the main thing I'm looking at, and I post these up every day for you, so we'll go look at these real quick to see where they're at in relation to everything, are going to be the deviation levels.
Mm-hmm.
And so on the deviation levels here, see what we got on the NASDAQ. And let's see where the NASDAQ is right now. We got to sit up around 38.91.25. And that puts us we're literally at 1.5 deviations. So this is a pivot level right here, okay? The next level would be up to 39.08, and it did not get it there right now. It basically just dropped right back down just now, back down to the deviation. What we'd really need to see is if we can get a spike reversal on it, and so that's what I'm going to try to see if we can get here. See if we have one. Okay, on any of the time frames. That's basically what I did on the pound trade. Was I was looking to see, okay, we're at a deviation level now. Let's look for a volume spike. We got the volume spike. The market then turned around. That gave us a good, trade to go short on. We did actually just have a volume spike on the Nasdaq. So if I zoom in on that on the 5-minute time frame, which does usually confirm the market going back the other direction. So right there, just zooming in a little bit, and that was a short. We actually had a short right at 38.93. So, which we're right off of at the moment. So yeah, I got a short on it at 38.93. It's pulling back, and that would be right now. That's my analysis. Right now, I'm short. I think we're probably pretty much done for the day, just based on the expected movement and based on the deviation level. So is that sort of what you're looking at? Are you looking at a potential pullback at this point now that it's already ran up? Is that what you're thinking, or sort of? I'm just trying to figure out where's your head at?
Yeah, pullback or a retracement, maybe a re-entry later, but I looks like it's running out of gas now.
Exactly. Yeah. So I don't think we really got much more left. I mean, there are those days where it just keeps going and going and going. Usually that's driven by just fantastic news. Everybody's buying. They're going nuts. More news comes out. It keeps driving it. There's not really much left for the day to keep driving this move.
Right.
I mean, there's nothing in its way because we're at new highs. That's always the hard part about highs, because you don't really have those barriers, right? You don't have that resistance and support. But what we did have, the one thing we did have that I like in my favor of, looking at a short at this point, is that we did have that volume spike. And, if you load up, say, like a 5-minute chart, and you put volume on it, then what you'll see is just a very large spike in volume right there, right at the high. And that usually is a sign of significant take profit. So if I go over here just to load up a basic volume bar. Oh, okay, I got to do a little recompile there. Let's see if this will work for me or not. All right, so after that comes up, but here I'll do it on Thinkorswim while I'm waiting on that one. There we go. Okay, see this large, surge in volume? And this is lunchtime, okay? And we got, the only bars that have really broke it earlier this morning. So we had a large surge in volume right there, right around lunchtime. Usually that means that massive top profit taking is taking place. Okay? Mm-hmm. And so basically, the guys that have been buying it up all morning, the big boys, the funds, and everything else, so they're getting out. So they started getting out at about 11:30, and then there was one last little run, and they start getting out right there. The next thing I look for on that is to see if I see it on the other indices at the same time. So I'll scroll through and I'll look at, say, S&P, and then I'll look at the Russell, and I'll look at the Dow. If I see those volume spikes happening across the board, so we saw it on the S&P. It's a little harder to see on the S&P simply because there's so much volume. Usually it's very easy to see it on the Russell. So we'll pull that up. Hopefully I selected the right one there. And if we can get it on the Russell, ideally the Nasdaq, which we got it on, and the Dow. The Dow, we did get the volume spike, but it definitely is flattened off. Let's check out the Russell. That's usually the easiest one to see a volume spike on because it's at the lowest volume of all the major indices. And that one would basically be my confirmation. We haven't got it, but it's heading south either way, and it's also at 1.5 deviation levels. So, yeah, I mean, if I'm trading pure NASDAQ, I don't see any of the other indices fighting, that short. And so I'm definitely looking at going short right now. So,
okay.
But that's,
so
as far as intra-market analysis, you got to go boom, boom, boom. So, yeah.
Yeah. Great. Okay. Thank you.
Hey, man. Thanks for calling in.
Have a great day.
You too.
Yep.
All right, so looking at all the indices at the moment, at least for this hour, are heading on back south. And, there's obviously all sorts of trades you can do with that. We can see what else there is we might be able to take advantage of. And so let's say we're checking out NASDAQ. What do we got here that we could look at? And really the ideal entry on that would have already happened about a point higher. We're not too far off of that yet. We may even get an oscillation back up to it. But point higher right there, 36.92. We go lower, we're talking about 38.87. And I do need to do a little cleanup on my chart there because I noticed something earlier. But expected range. I want to see what are my expectations in movement in order to be able to properly calculate that out. But we're sort of on the high end of the range. We definitely have room to move down. But we'll see how much movement we got. That an 11-point expectation on the hour with a 6-point move there. And so we still have about 6 points left where we could move from high to low to the downside on this move. So 6 points below where we're at right now. That's where I'd use a simulator. And let's say we go in and go, okay, so on the simulation settings, assuming I want to, say there's going to be a 6-point move. Then what am I going to get for my sell side simulation price? Pardon me, folks. I was up a little bit late with my boy last night. He was not feeling well. So, passing that on to me. All right, so 6 points down. And what we got right here, sell at 77, buy back at 10. That's not bad. But we only have 15 minutes for that move to happen. Not seeing a lot of strong sell volume on this chart right here. So, yeah, we're going to have to hold off on that one. I'm not going to take that trade at the moment. Okay? But I am looking short. I would have liked to get in the trade a little bit earlier. Let's see, it's pulling back. Let's see here. Just trying to find what's the best contract for the trade. And one thing I always teach is to make sure you go in and do look at the out of the monies. Look at the next hour. And see if they're similarly priced. Right here, we got to sell for 83. We got to sell for 80. They're only 2 points away. I'd be much more comfortable with the out of the money the next hour out. Basically, we're talking about a few dollars different risk. A lot more profit on the closer hour one. But that's because there's only 15 minutes left. And I don't like only having 15 minutes for that trade to be able to make its move. So, sorry. Man, I'm just sneezing like crazy. Okay. So what is our trade? Here's our trade right here. We got the 38.87. And that would be the contract I'd be looking at. Maybe doing like, say, one contract on the trade. You could be doing 100 contracts on the trade, whatever you want to do. But I'd want that 3 o'clock one. I'd want a little more time. And before I hit the button on it, I would make sure I look at the other expirations to see, again, even further out. Sometimes you'll be surprised. You can get even a better trade. So, you don't have to hop on it right away. You can look and go, really, what is the best trade? And you have several choices right here. Okay, we got the current hour, 15-minute one at 38.89. We got the 3 o'clock at 81. We got the 38.84 at 75. Well, if I think it can hit 38.84, Like, is that a reasonable expectation based on pricing? Yeah, 38.84 is definitely, I mean, that's even off the last little, bounce right there, right? We had that last volume spike. It came down and pushed back up. So 38.84 is actually a very reasonable price. And so if I was going to go for that, then I would also consider looking at this contract right here. Let's put these two side by side. We're talking, a few dollars difference. But to me, the big thing that we're talking about here is the ability to have till the end of the market day for the market to make a 5-6 point pullback on the Nasdaq. Not a big deal. So, out of all the choices, out of the 2 o'clock, which is really cheap but really low probability in my opinion at this point. I mean, it's 38.89, so it is a little bit closer, but still, it's I would probably, out of all these, I'm going to favor the 415 on a pullback because I get that pullback and I get to the end of the day for it to happen, so I'm not trying to force and make it happen right now. And so that is my pick. I'll go ahead and put that order on and get rid of the other two. There we go. And put your take profit in. On that one, I'm going to go, I'm going to take everything off when it hits it, so I'm going to put a buyback in immediately at 57 on it. So right on over here at $57, got our buyback in. And taking a little quick look over at our pound-dollar trade, but that thing is just riding on the line. And we need a little bit more tick activity going on. We got our lasts are lining up, but we need to get enough mid quotes going to push that thing down just a little bit further so we can finish off the rest of them. We were targeting 31.57, and it looks like we are, like I said, heading down there. We just we'd buy nice to get a couple more ticks in there, because remember, it's going to take the last 25 non-sequential quotes, meaning not the exact same quote in a row over and over and over again. And let's see here. It's right down at 71.58. We literally just need a couple ticks on the trade, and we'll be good. I mean, it just keeps sitting right down here. We just need it to push down a little bit more. So looking at volume on that. Let's see what we got here. And let's see if we can get this out of the way. And we'll put that up. There we go. We got our deviation. Yeah, we got the deviation. That's going well. Okay, so really, I mean, the last piece is we just need to get a little bit of volume to push it down so we can finish it out and close out the trade. And let's pull it up. We'll look at the expected volume, see how our volume is helping us out currently on this trade at the moment. It's got about 11 minutes for it to do its thing. And then we'll wrap up our news while that thing's working its final minutes off there in the background. Okay, so it's getting close. Just got to move a little bit more. All right, Darrell will be back, and we'll wrap up news for tomorrow, so you'll be ready for that. Okay?
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of of shorting and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, come on back here to the Diagnostic Trading Hour. All right, so let's see what we got going on for tomorrow. We have a few announcements coming out real quick. Let me run through those with you. And for tonight, we already got that covered. But we got the trade balance report. So open that one up as well. And should not take long at all to cover these. Okay, so trade balance report is going to be released at 9:30. That gives us an 11 o'clock expiration that we're going to be looking at. And to see if we have a consistency there, looks like you're looking at a 30 pips for a 6 p.m. entry, 11 p.m. expiration on Oxy dollar for a 30 pip iron condor for the trade balance report tonight. So there hasn't been a lot of premium, though, so maybe a bit hard to get filled on that one. Rolling on over to the next one, we got the construction PMI happening in the morning on the pound dollar. So we're going to be looking for a 7 a.m. expiration. We're going to be looking for an 11 o'clock entry. And scrolling down the list, construction PMI has actually been pretty nice and low lately. And I'm going to put that one on the 30 pip as well. So we're going to do 30 pips, 11 p.m. to 7 a.m. There's only a couple times that would have got us, like on a one-to-one basis, but the rest of the time is looking really good. And so 30 pips, 30 pips for 11 p.m. to 7 a.m. on the pound dollar iron condor, minimum profit 30. And that's the nationwide housing, and we also have, like I said, the construction PMI. So we're going to put both of those into the same group, a 2 a.m. and a 4:30 a.m. release. Do the same trade on both of those. And then the one other trade that we have going on, we have maybe two other trades actually. We have building approvals. Okay, that's going to be tomorrow night, so we can talk about that tomorrow. We got ADP employment. And on ADP employment, let's see, what do we got here? See if there's anything major. It looks like there's really not. There are a few moves. There's a couple decent-sized moves. All in all, though, not a big move. The report comes out in the morning, the ADP non-farm employment change. Could be at 8:15. So I'm going to look for an 8 o'clock. I'm going to go for a 10 o'clock expiration. And on that, I can actually do a 30 pip iron condor on that one. So 8 a.m. entry, 10 a.m. expiration on the euro dollar for 30 pips minimum profit iron condor. Looking on over at the 8:15 report, just looking to see real quick, is there anything we could might be able to pull off a little bit more? And yeah, that looks really solid. I'd say 35 pips for a 3 o'clock expiration. So at as early as 7 a.m. for 3 p.m. at Eurodollar, 35 pip minimum profit iron condor. Basically taking advantage of the ADP non-farm payroll. And we got Yellen talking tomorrow, but she's speaking at the IMF. That's wonderful. Anyways, that's the International Monetary Fund. And that will catch you up on our news reports for the day, for the next 24 hours here, so you can check out and see if there's any good trades that you can take advantage of. And let's see, we do have, looking back over real quick at our trade, market is moving down. It might expire in the money. It'll be close. We'll see on those remaining contracts that are left. So, anyways, y'all have a great day. I'll see you tomorrow right here on the Diagnostic Trading Hour.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.